Talking of global investments, we have a special voice joining us on the show today, someone who's based out of US, runs an international fund, and of course, at the same time has a good handle on global investment patterns and trends. US Freedom Capital's David Gunderson is here with us on the show. David, good evening. Thanks a lot for your time. Before we talk about your own fund, let's understand from you how the investing environment in US looking, particularly after the new political leadership has taken center stage, and of course also talk to us about the region around Texas where you're based out of.
Well, thank you first for having me by. The U.S. is very recently had its presidential election, and the full impact of the new president is yet to be determined. I think there's a lot of enthusiasm among the business environment for what we hear for lower regulations and lower taxes, and those things we believe can only help. On the U.S. writ large, I think the economy has been performing very well for a number of years. I think the rally has gone on longer than a lot of people expected. In general, I think everyone has been pleased with that. As you know, real estate is a very local investment, it's a very local exercise, and so certain places perform better than others. In Texas, where our investments are located, we've been the recipient of 90% of the new jobs in the United States in the last decade or so, and a continuous migration inside the U.S. from high tax and high regulation states to low tax and low regulation states such as Texas.
Okay, now I want to get a little India specific. Tell us about the key funds of Freedom Capital, its category, and why should they appeal to Indian investors?
Certainly. The funds that we've built are primarily structured as yield investments, and they're both existing stabilized products, which would be your most conservative case. Our fund is domiciled in the Cayman Islands, and that allows us to be legally exempt from U.S. income and estate tax, which is a very important consideration for our offshore investors. And as a yield product, that's going to be a safe and stable return. It's going to have higher collateral and higher stability than perhaps equity investments might in the same structure. So we invest at essentially 3 different levels of the capital stack. At our most conservative level, we have the safety and security of a senior loan partnering with a U.S. bank. We have the first claim against real estate. We have the first claim against profits from the tenant, corporate guarantees, personal guarantees, highly secured product. And that target return is about 8.5% PA net to the investor in U.S. dollars. If you go looking for a little bit higher yield, we have ground-up development opportunities. Again, this would be a secured position inside that investment, maybe slightly more risk in terms that, it's still a building to be built. There's the inevitable construction risk. But those returns are offering at 12.5% PA, again, net to the investor in U.S. dollars.
Okay, let's talk a bit more about those indicative yields, 8%, 12%. How does the role of your partner, the $6 billion debt fund manager, play into this? Tell us a bit about that.
Certainly. So Lancaster Pollard is the largest U.S. government guaranteed lender in the United States, or originator of loans in the United States, in the senior housing and healthcare sector, with $6 billion under management and $1 billion of new activity every year. It gives us great access to deal flow, highest quality borrowers, highest quality underlying assets for our investors. Certainly the yield structure in that product offering allows us to be in a first position alongside a U.S. bank.
David, we understand that you've been meeting a lot of HNI investors on your trip to India. Talk to us about what kind of response are you gathering after meeting them lately?
Well, we've been meeting with both high net worth, ultra high net worth, family office, and some institutional partners as well, and the reception has been very positive across the board. I think there's a general acceptance that dollar strength against the rupee, historically is a given. The last few months or so has been a slight reversal to that, but we don't anticipate any change to the long-term trend. The response has been very enthusiastic in terms of the yields. When you look at these in dollar-denominated returns compared to an equivalent yield, say a fixed deposits or a tax-exempt bond here in India, these are really outsized. And the perhaps biggest thing that we're seeing is a sophistication among Indian investors now post-demonetization, with money flowing into the banks, more institutional products being recognized, more of an interest through the LRS, liberalized remittance scheme, to move a small portion of their investment offshore, and an interest in diversification. I think we're very well positioned for that trend.
Also talk to us about the EB5 Visa program, which is an interesting opportunity for investors' perspective.
Certainly, happy to. And that's how our company was formed originally, was as an EB5 regional center. We have offices around the world. That business has been active since 2012. And our directors and shareholders are two of the former directors of U.S. immigration. So we have an onboard immigration experience that is second to none. In terms of EB5 as it relates to the Indian investors, this is relatively new, with only about 150 Indian families taking advantage of the program last year. It was a bit of a surprise to us, actually, given the affinity between India and the United States, that so few people would have heard about the opportunity before. But there's a very short window here for Indian investors, we believe, to get in under the current investment target, which is $500,000 USD. And we think that that window is open just for a few months more before the minimum investment amount is going to inevitably increase. I think there's some significant support in both political parties in the U.S. This is a job-creating program, so it's hard for U.S. politicians to vote against it. And I think that long-term, India is destined for several thousand EB5 visas every year.
David, I want to get your views also on what we're seeing with the US dollar, the kind of rally. We've seen it gaining strength so much. Where do you see it headed? That's bound to impact businesses like yours, is bound to impact when you try to raise funds when you come to India.
So the dollar long-term against the rupee certainly, I think, has a very defined trend, and we expect that to continue. Anytime you have an emerging economy with high interest rates against a more stable and mature economy, I think that trend sets itself. Dollar strength is, in timing, interestingly correlated to the election of President Trump, and trends don't always continue in the same path they're in, but we believe long-term the dollar continues to be a reserve currency for the world for quite some time.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.